Is Open a stock worth investing? Oh my gosh, a bird just hit the window. Jesus. Is Open a stock worth investing in? And kind of just like that bird crashing the window, I think that's a great metaphor to use for this stock. So what's going on, guys? It's Ricky with TechBud Solutions, and I'm going to keep this video super short and sweet. I want to talk about the technicals. As many of you guys have seen, Open stock has been incredibly bullish recently. If you look at its recent price momentum from lows of 51 cents per share, and this is of June of 2025 to the highs of $10.97, we have experienced, as of right now, trading at $9 per share, a 1,600% ROI. But at one point, it was nearly at 2,000 when it was trading at nearly $11 per share. So why? What and how is causing this stock to trade at these levels? First off, it's the new version of a meme stock. And I mean that through and through. There is nothing in the last 3 months that Open has actually implemented that would yield a 2,000% return. I'm not talking about a 2,000% return, kind of like Nvidia from the past 5 to 10 years, because it's grown, into a $1 trillion company. This is Open. Open is a terrible company that pumped and dumped during the post-pandemic rally from highs of $39 all the way down to 51 cents per share. Why did it sell off so much? Because technically speaking, this is a company that has been losing money year after year after year. So what sparked this price momentum? A new CEO and original founders and executives coming back onto the board. With new money, they think that they could really turn things around for this struggling company. I don't even care if they do begin to turn things around. Nothing would have yielded a 2,000% return justifiably. I think that's the easiest way that I can put it. There is no question that this stock will eventually crash, just like GameStop and just like every other meme stock. It doesn't mean that it has to stop now. All I'm saying is that if you're a beginner and you don't want to be exposed to that kind of risk, beware. In the short term, it has a good story and has great price momentum. So if you're an active trader that is okay with high volatile stocks and you know how to manage risk, yeah, I think that money can be made going long on Open. Because just like any other meme stock or pump and dump stock, right now with the current environment that the market holds, it could support more bullish price action for Open. Two very different things. Understand the difference between a trade and an investment. So to put it simple, if you choose to trade it to go long, trade at your own risk. Even when it comes down to shorting it, it's not a safe stock to short. I personally believe that this is one of the most overvalued companies based off of the past 3 months because of its price momentum. And even then, it's not a safe stock to short because it has good price and it has a good story as of right now, good price momentum and a good story right now, which again can mean that if it went from 51 cents per share to $10, what's stopping it to go from $10 to $15 per share? That is how irrational the market is. So it's really important to understand that and to respect it regardless of how terrible fundamentally the stock is doing. With that being said, let's look into their fundamentals. Let's not just talk and share and give an opinion, but let's look into their fundamentals. This is a company with a negative PE ratio. Well, Ricky, why is it negative 21.9 times its earnings? Because it's a company that loses $300 million according to the net income every single year based off of its most recent filing. If we look at its PE, if we look at its market cap, it has a $6.6 billion market cap, yet it loses $300 million every single year. This isn't a new company. This is a company that has been around and is still losing money. Again, it is not a growing business. It's a failing business with a new story during one of the most irrational markets that we have experienced. When we look and dive even deeper into Opendoor, we could see its recent revenue from the highs of 2019 2022 to where we are right now, we've been declining. We're kind of plateauing right now, so we will see if things begin to turn around for this company according to what the CEO and executives are saying, right? But as of right now, there is no change. But like we know, the market likes to factor things in advance prior. So we will be paying close attention quarter after quarter to see if it actually begins to grow. But even then, it doesn't justify a 2,000% return in 3 months. That simple. When you look at the actual LTM financials, as in like the overall breakdown of what this company makes per year, it's revenue, it's gross profit, it's breakdown for R&D, SG&A, operating profit, and then its overall net profit, just like we talked about, $305 million. When you look at it based off of its most recent quarterly filing, it lost around $29 million. Not terrible, but $29 million. Again, there's no reason to overhype it. It's not a successful business, but we will see how things continue to develop for this business. Again, if you want to dive a little bit deeper into learning more about Open to see if it's a good investment for you, it's going to be that first link in the description down below. You guys can look into Investing Pro, and it helps you perform a fundamental analysis on the stock. Again, if you have any questions, feel free to comment down below. Don't forget, we break down stocks like this all the time within our live trading session, and that's that second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.